Okay.
Good. All right. Well, hey, thank you all so much for hopping on this Zoom today. I just want to welcome you on behalf of the Beaufort Regional Chamber. We're really excited to be doing these type of webinars, and we're going to be bringing more to you with all kinds of different topics. But I'm really appreciative of Kendall doing probably what's going to look like a 4-part series for a tax series. Super important. I've got my notepad ready. So he will dive into his topic here, but I do just want to say thank you, Kendall, on behalf of the chamber. I know we will all learn something for sure. And I think all of y'all know Kendall, but he works for Robinson Grant and Company, and his office is 806 Boundary Street. So what an important person in our local community. So Kendall, all yours. And then at the end, we will do a Q&A. So if you have questions, you can always enter your questions in the chat section along the way, or at the end, we can open it up to Q&A.
Yeah, and Brent, and Josh and David, Whitney, if y'all have any question, or Brent, if y'all have any questions along the way, might be more appropriate to ask them as we go. So that's fine. It doesn't, okay. It won't interrupt anything. That'll be great. So the topic today is the Paycheck Protection Program. The acronym for that is PPP, and the Employee Retention Credit, which is ERC. And this is just the basics because, believe it or not, each one of these topics could fill, an hour or two of, so we're just trying to get everybody familiar with it. It's more of a familiarity type of a thing. We're not going to go through in detail how to calculate everything, but hopefully by the end of this presentation, you will understand what it means, if you may be able to qualify, or whether it's you're not going to qualify. And I will send you the notes that I'm using are in a PowerPoint presentation. I'll send those to Ginger afterwards, and she can send them out to everybody. The original CARES Act, which came up in March of 2020, introduced 2 mutually exclusive incentives. One was the PPP, and one was the ERC. So if you received the Payroll Protection Program loan, then you couldn't claim the Employee Retention Credit. And so it was a little bit easier then, because everybody was going for the Payroll Protection Program, because that was potentially significantly more dollars than the Employee Retention Credit. Then, as of December 27th of 2020, Congress and the president passed, I don't know the name of the act, but a new act that allowed you to retroactively claim the Employee Retention Credit, even if you received a PPP. So this was great news for the small business people, because now they could go back and potentially get the Employee Retention Credit, even if they've had the PPP. And hopefully everybody is aware, of both of these, especially the PPP gets a lot of play in the press. The Employee Retention Credit doesn't get as much. And I think one of the reasons is, if you had an opportunity to get PPP, that's what you wanted to do. And then it eliminated ERC, but now ERC is back on the table. So we're going to talk about ERC first. So the first step is to determine if you're eligible for the Employee Retention Credit. There's going to be a lot of facts and figures, but there again, I'm going to send this out to you so you can ask questions along the way. The details will be in the notes that I send to you. So an employer is eligible for the ERC if their business was either partially or fully suspended due to government order, if Governor McMaster shut you down, or if you're in the city of Beaufort, if the city of Beaufort said you can't operate, or the county, or if the employer had a 50% or more reduction in gross revenue in any quarter of 2020 relative to the same quarter in 2019. So if your gross receipts was 100 in 2019 for the second quarter, they had to be 50 or less in the second quarter of 2020 in order to qualify. All right, so this is it's fairly easy to determine if you're eligible. You just determine your receipts, gross revenue per quarter for 2020 and compare them to the same quarters of 2019. If none of those quarters in 2020 are 50% or less of your revenue in 2019, you're done with the ERC. You can't take it unless you were shut down by the government for a period of time. Hair salons were a big one. They were shut down. I believe restaurants were probably shut down.
So Kendall, I
Mhm.
do have a question. So in terms of the shutdown period, it could be what, 30 days? I mean, it really doesn't matter, right? 30, 60?
That's right. Now,
Okay.
the key to that, though, Brent, is you're only going to qualify during the period you're shut down.
Right.
Oh, the wages that were paid during the shutdown is what they're going to qualify. So,
Okay.
if you qualify based on the drop in revenue, typically you're going to get a lot bigger window to be able to claim the ERC. So that's your first go-to. If you had a reduction in 50%, and the interesting part about this is I've got a client that actually their 2020 revenue was more than their 2019, but the revenue in the second quarter was less than 50% of 2019. So they qualify for the employee retention credit. So don't look, you can look to the entire year, but you're gonna have better results typically if you look at each quarter individually. And don't think, well, it was a pretty good year for me, so I don't think I qualify. Take a look at it. You'd be surprised what might be there. So if the employer does qualify for the ERC, then you move to the second step, which is determining the wages that are eligible for the credit. And this is where it starts to get complicated. Determine whether you are eligible is fairly simple. Determining which wages is more complicated. So first you determine which quarters qualify. The first quarter that qualifies is the one that gross revenue dropped to 50% or less of 2019. Let's assume that was the second quarter. The quarter ending June 30 of 2020 was less than 50% of the revenue in the quarter ending June 30, 2019. So that's your first quarter, March 1st to June 30th. Excuse me, April 1st to June 30th. Then you have to determine the last quarter. When your revenue rebounds to 80% of the prior year, then that's the last quarter. So if you qualify in one quarter, you're going to qualify at least for two quarters, because if the second quarter is less than 50% and the third quarter rebounds to 100% or really more than 80%, then they shut you off at the end of that quarter. So if you qualify for any quarter, you're going to qualify for at least two quarters. I guess the caveat being, unless it's the fourth quarter of 2020. There is a 2020 ERC and a 2021 ERC. We'll talk about the 2021 in a second. So now you determine which quarters you've got. Now within that, you have to determine what wages qualify. Any wages paid within that quarter qualify. There again, the caveat is first quarter wages have to have been paid after March 12th of 2020. So anything before March 12th isn't going to qualify. So if the first quarter is what qualifies you for the ERC, the wages have to be paid after March 12th. The credit is 50% of the wages that are paid to employees with a limit of $10,000 in wages per employee. So let's say, Josh, we got you and I are employees of this company, and we're the only two employees. The first quarter wages, the revenue was fine. Second quarter revenue was 40% of what it was in the prior year. So now the wages that were paid to you and I in the second quarter qualify, and the third quarter automatically, regardless of what the third quarter was. But that's the end of it, because the third quarter, the revenue rebounded to the 2019 levels. So we look at your wages and my wages. They're limited to $10,000, for me, and $10,000 to you. And our credit, if they paid us more than the $10,000, is $5,000 per employee, which is a $10,000 credit. So these aren't necessarily small numbers we're talking about. The credit is also refundable. So it's a payroll tax credit, but if you didn't have that much payroll taxes, they will refund you the payroll taxes you paid plus additional. They'll give you more money than the payroll taxes you paid. So this could be fairly lucrative for a lot of different businesses. The way to claim the credit for 2020, of course, that law wasn't in place when we did the payroll tax returns. So you have to go back and file an amended tax return, a 941X. If you've got a payroll company doing your payroll, like Paychex or ADP, then they have a process. Basically, you tell them what quarters you qualify, and they'll run the reports for you and do the amended returns. If not, you'll have to go back and calculate that on your own. One of the drawbacks to filing amended returns is I don't think the mail system is all that reliable right now. And when the mail gets to the IRS, it's just not getting opened. I mean, I don't know how else to put it. So this could sit here for a long time before you get your refund. Don't tell your business partner you're getting a $15,000 refund. Let's go out and spend it. I'd wait till you get that before you start to spend it. One of the kickers is the wages that you claim the employee retention credit cannot be paid with funds received from the PPP loan. We're going to get into that a little bit more later. But if you got a PPP loan and paid wages, those wages cannot be used to claim the employee retention credit. There's ways to mitigate that, and we'll talk about that later. So that's the 2020 credit in a nutshell. I know I went through it real quick, and it's just the basics. Any questions, Josh, David, Whitney, or Brent?
Yeah, I do have another question, Kendall.
Okay.
So what if your business is all 1099s?
Not going to qualify.
So it has to be payroll people.
Yeah.
Right?
And
W-2s.
self-employed individuals who don't have any employees, unlike the PPP, aren't going to qualify for the ERC.
Okay.
Yep. Yep.
Thank you.
Yeah. You have a question, Josh? Okay. All right. Now 2021, there was a few changes, and it's even more lucrative for 2021. For wages paid between January 1 and June 30, 2021, right now it ends at June 30. The credit is increased to 70% of wages, and the $10,000 limit per employee in 2020 is now per quarter. So using the same example, Josh, if they paid us $10,000 each in the first quarter and $10,000 in the second quarter, or in both wages would qualify, which makes the maximum credit per employee $14,000 in 2021 instead of the $5,000 in 2020. So the good news about that is you can adjust your payroll tax deposits to account for that. If you know that you're going to qualify for it, you can adjust your payroll tax deposit so that you don't have to ask for a big refund when you file your 941. You just have accounted for it in your payroll tax deposits. The other thing about 2021 is the reduction in revenue. Like we talked about being a 50% reduction in 2020 is only a 20% reduction in 2021. So you compare your 2021 gross revenue per quarter to the same quarter in 2019, not 2020. You're skipping 2020 in the comparison. You're going back to 2019. So, if your revenue was 100 in the first quarter of 2019, and it was 80 or less in that first quarter of 2021, you're going to qualify, and that's going to open up a lot as far as wages go. Maximum credit of 14,000. All right. All right. So that is the ERC in a nutshell. It's not real complicated. It just seems kind of complicated. So what we're doing with our clients when we're doing their tax returns is we are asking to see data per quarter, see if they're going to qualify. Because I tell you, when I was going through the material for this presentation, I realized that a lot more people than I was originally thinking were going to qualify are going to qualify. Because even though, you know, one of the things that in my mind was going to make it difficult was the fact that if you got a PPP loan, the wages you paid with the PPP loan could not be used for the ERC calculation. But there's a lot of other expenses that you can use in the PPP forgiveness application other than wages. So there still should be plenty of wages left over in order to claim the ERC. And I would tell you to be aggressive as far as this goes. You know, if you know you don't qualify, or you know that you know, for either because of the reduction in gross revenue or the fact that you might have used a PPP loan, then I'm certainly not advocating to do anything there, but be aggressive as far as what wages did I pay with PPP. You know, it's hard to, you know, when you put a bunch of water in a bucket, it's hard to segregate out, you know, what might be yellow water and what might be, you know, clean water. And same thing here. So let's be aggressive in that area when determining what wages will qualify for PPP. I mean, for ERC.
Can I ask you a question?
Sure.
Okay, so we applied for and received a PPP loan last year. And in filing for forgiveness, we basically credited it all towards payroll.
Yep, most people did. Yeah.
And so now we've got the opportunity for the ERC, but that same quarter that we were paying people from the PPP, basically was the quarter in which we had a 50% or more loss of business, basically through our thrift stores that we operate.
Yeah.
So I assume that we're out of luck as far as being able to utilize the ERC.
Well, I don't think so. Have you already gotten forgiveness?
Yes.
Yeah. I don't think so. Now, the IRS has not. We're still waiting on guidance. So one of the things we'll talk about later is if you have not applied for forgiveness on the PPP, my suggestion is to wait until more guidance has come out. What I would do, David, is I would, you know, have a worksheet and say, okay, we did it because at the time that's all we needed to do, and we couldn't get the ERC anyway. And I would go through and list out your mortgage interest and or your rent, your utilities. What else? Rent, utilities, worker protection costs, and additional payroll costs, because more than likely during that 24-week period, which probably became the covered period, you probably spent a lot more in wages than just a PPP loan, correct?
A little bit, yeah. Basically, okay. From mid-March to mid-June or almost July, our stores were shut down completely. So okay. At that time, we kept people on payroll. We utilized the PPP money once we got that, which was, I think, in April. We applied and got it in April. But yeah, we had actually our landlord reduced our rent for a month or two as well, so we were fortunate in that way. But we still had a lot of, you know, other expenses, utilities and so forth.
Sure.
But just to make things simple, when I applied for the forgiveness, it's like I don't want to have to go through all these other records and try and add this in and calculate, was this 60% or more, or what, you know, how much was payroll. I just said it's all payroll and paid it. And so I'm wondering, can I get back and revise it? Because we've already gotten the letter saying your loan has been forgiven.
you're going to go back and you're going to revise the application, but you're not going to file the application. You don't need to send it to anybody. That's just for your records, for you to be able to say, here was my wages, here was my rent, here were my utilities, and let's say that added up to well, use easy numbers. That added up to 100,000, and 60,000 of it was wages, which is the requirement. Your PPP loan was 100,000.
Right.
So now you're going to say, okay, the 40,000, and your wages weren't 60,000; they were 100,000, let's say. And in the application, you just said 100,000 wages were done. So now you're going to take 40,000 off the 100,000 forgiveness, and you're going to take the remaining 60,000, the wages over and above that. You'll free up $40,000 in wages to be able to claim the PPP. The ERC. And in addition to that, not to complicate it further, I would go so far as to say, determine which quarters you qualify. If any wages were paid for the PPP forgiveness outside of those quarters, I think you can say that PPP was used for those wages, not the wages inside the ERC calculation period. Does that make sense?
Yeah, good.
Okay. Yeah.
Good. Okay.
So you're not out of luck. At least we don't think you're out of luck. The IRS hasn't come out with guidance yet, but that's what I'm talking about, being aggressive in this area. If the law would have been different when you did your application, you would have done that application a lot differently. So do it as if it is different. Just don't file it with anybody.
Okay.
All right. So if you haven't received a first PPP loan, it's still not too late. You've got till March 31st to do your first PPP loan. Anybody that was in operation as of February 15th of 2020 and paid qualifying wages can apply for the first draw. First draw can be used for payroll costs, including benefits, mortgage interest, rent, utilities, worker protection costs. The loan amount is 2.5 times the average monthly payroll for 2019 or 2020, whichever is greater, whichever comes out to a better number for you. PPP2 is very, very similar, but there's some important differences. Number one, you had to be in operation as of February 15th of 2020, but you must be able to demonstrate a 25% or greater reduction in revenue relative to the same quarter in 2020. So where the ERC was 50%, the PPP is 25%. Now, unlike ERC, once you demonstrate that 25% or greater reduction in a quarter, you qualify. You don't have to worry about which quarter I qualify in. The bank that you get the PPP loan from will ask you for some verification, some documentation. Typically, the ones I've done are just an internally generated financial statement signed by the owner saying, here it is. I do understand that if you don't have financial statements at this point, you can send bank statements. Some banks might even accept, an affidavit from you, but they got to have something to let them know that you had that reduction. And keep in mind, the PPP is a loan until it's forgiven. And once it's forgiven, then it's just like a grant, a non-taxable grant, because it's not taxable income. But I hate to say it's free money. I mean, I guess somebody's going to pay for it eventually, but probably not us. The loan forgiveness application is due 10 months after the covered period. Okay, the covered period is 24 weeks after the loan is funded. So if you got it, like David said, mid-April, you're looking at May, June, July, August, September, probably 1st of October, just short of 6 months. is your covered period, and you got 10 months after that before the forgiveness application is filed. If you don't file it within the 10 months, you have to start making payments on that loan. You can still file it, but it's not deferred until you file the application. The forgiveness application, and David, I'm assuming this is what y'all did, is probably the 3508S might not have been out when y'all filed for forgiveness. If the loan amount's under 150,000, you want to file the 3508S. It can't get any easier. There's really I don't think there's any documentation that the banks require immediately. They just, you tell them how much your wages were, and you certify that you used it for the purposes it was intended, and you go on.
The only thing we had to do was we just uploaded our Form 941s for the past 4 quarters.
Who did you go through? Do you mind me asking who you went through?
South State Bank.
Yeah, okay.
And SBA has outsourced it to some company called SmartBiz, I think it is, that's actually handling it.
You know, it's interesting because once you apply for the forgiveness, the banks, I think I'm right on this, have 2 months to act on the application. And I think the SBA has another 3 months to do something with it then. But my experience has been once that application is filed, it's pretty quick. Banks haven't been taking long, and SBA hasn't been taking long. They don't want the money back.
Took about 2 weeks, and we had the money in our account.
Yeah. So, if you can't use the 3508S, then use the 3508EZ. There again, that's pretty simple. And and there's a checklist. If you Google 3508EZ on, I think there's 4 different things that I've got it here somewhere. 4 different things on what you have to do to use the 3508EZ. And then if you can't use either one of those, you use the 3508. Still isn't real difficult, but a little bit more difficult. I want to reiterate, if forgiveness application has not been filed yet, I would suggest waiting until the IRS gives you some guidance on the interaction between ERC and not being able to use PPP funds to pay wages on amounts used for the ERC. Unless you don't qualify for ERC. If you're a sole proprietor with no employees, you could get the PPP, but you're not going to qualify for ERC. So in that case, you could go ahead and do it. Or if you didn't have the requisite reduction in gross revenue for the ERC, then go ahead and apply for forgiveness. There's no need to wait. And then this going towards your point, David, if you've already applied for forgiveness, you calculate the amount of PPP loan that was forgiven for mortgage, interest, rent, utilities, and worker protections. Then the rest would be for payroll. Keep in mind that at least 60% has to be for of the forgiven amount must be for payroll, but everything else would qualify for the ERC, including anything over and above what you needed for forgiveness on the PPP. So that's the end of my little spiel here. Any questions? Josh, did you get a PPP loan? You're muted.
Oh, I'm mute. No, I'm manage contractor business.
Okay.
So like we're 1099s. It's more I try and get involved with all the webinars on stuff I'm not familiar with. So definitely even though we don't do PP, learn definitely a lot from this.
Yeah. Now sole proprietors can still qualify for PPP loans. They don't have to, with the PPP, they don't have to be unlike, so if sole proprietor or a partnership, they don't pay themselves wages, but they could still qualify for PPP, even if they don't have any employees.
So how would that work? So like with our agents, for example, maybe you say they had some stuff happen this past year where they might need like financial assistance. How would someone that like works as like a realtor or independent contractor go about applying? Yeah, so their wages, so to speak, for purposes of PPP is their Schedule C. Okay. So if they've got a Schedule C, of 10,000, well, let's use 12,000 because then of $12,000 for the year, their average
monthly payroll is 1,000, and they get 2.5 times that, $2,500. If their Schedule C is 100,000 net income, then well, I shouldn't have picked that one because I can't do the math real quick. But I think they'll qualify up to about $21,000 in PPP. So their Schedule C is in effect their wages for self-employed individuals.
Okay.
Now, where well, we won't get into that, but so where the sole proprietor who has no employees doesn't qualify for ERC, they very well may qualify for PPP. And all those 1099 contractors, I mean, you don't want to get into the business of calculating for them, but they could qualify also, which, if they can get it, that's great. And I haven't seen anything about this, but if you haven't applied for PPP 1, I think you can still qualify. You can still apply for the PPP 1 through March 31st. And then I don't see anything that would prevent you from going on to PPP 2, as long as you had 25% or less in gross revenue. One in a real estate firm would certainly be able to calculate that. The agents themselves may or may not be able to, but they could potentially go to y'all and find out if they if what their wages were per quarter, what their, not wages, but what their subcontract income was per quarter. And it's there again, I mean, 20,000 is 20,000, and if you're making 100,000, you could qualify up to that. So don't overlook those people.
Okay. Yeah.
Okay.
Yeah. Thank you. That was helpful.
Yeah. Whitney, do you have any questions? Whitney might not even be there. Oh, there she is.
Here, I'm just scribbling notes like crazy. Thank you,
But-
Kendall. This is fantastic.
Well, you're welcome. The slides that I'll send to Ginger, and I assume you'll send them out to everybody, Ginger, that was registered. Got my name and contact information. You send me an email, call me, whatever. If you have any questions or there's something you want to discuss, that maybe you didn't want to discuss with the group, just feel free to reach out to me. Okay.
Kendall,
One
man.
question.
Oh, yeah.
Go ahead.
Yep.
Go ahead, David.
I just, one question, a little off topic, but part of the whole CARES thing, the EIDL advance that we could have gotten last year. Is there anything we need to do if we got just the advance but didn't take out the loan, as far as asking for forgiveness, right? It's just, here's your money, go use it.
Here's your money, go use it. Yeah,
That's
that's
what I
right.
thought. Okay.
Now, you're a nonprofit, so I guess it doesn't matter a whole lot, but that advance is not taxable income either.
Right.
And South Carolina has, which this shocked me, I'll be honest with you. South Carolina has agreed to treat it the same way for their purposes as federal did. There's a ton of money that came into, this relatively small community over the country that's not gonna be taxed. And I thought for sure South Carolina was gonna say that they were gonna tax those proceeds, but they've agreed to treat it however the feds treated it. So that's great news, I think, for the taxpayers.
Awesome.
That's it.
Well, hey,
Now,
Kendall. Wow.
next week,
Yes.
thought
Yes.
we
I
were
was just
talking
ready to ask
about, let's see here if I wrote it down. Tax planning after year end for 2020. So what can we do now to reduce 2020 taxes and begin planning for 2021?
Love it. Great topic.
Yeah. Yeah. There's not a whole lot can be done after year end, but there are some things that are pretty easy to do.
Good.
And so let's kind of explore those.
Awesome. Well, again, thank you to all that hopped on the call. I'm like you, Whitney. I literally ripped through 3 pages of notes like crazy. So thanks for all that good information. And this will be the same time next Wednesday with the new topic. And again, thank you all for participating. And Kendall, thank you for doing this. We really appreciate it.
Okay, Brent, y'all have a good one.
Yep, have a
Josh,
good afternoon.
Kendall.
Ginger, see you later.
Thanks, guys. Bye.